problem. Thanks, Andrew. Okay, so we're gonna have Gia come on. Gia Her with PBM Insurance, and again, she's gonna be talking about what is happening in the homeowners insurance, the changes, closures that are happening, and she's gonna give us a little update to a prediction as well. Gia, can you hear us? Can you share your slides?
Yes. Hi,
Okay,
Annie.
perfect.
Thank you.
Mhm.
Thank you, everybody. Thank you to Travis, Rise Realty, and Annie for having me here today. My name is Gia Her. I am the agency owner of PBM Insurance. I've been in industry for, should probably share my screen so you guys have a face to the name. I've been in the industry for about 5 years now, licensed in PNC and working predominantly with homeowners, first-time home buyers, basically. So I've been working with realtors and lenders for the past 5+ years. And so I make it a point to make sure that I stay up to date with what's going on in the industry because it impacts people that I work with. And so that being said, I'm going to just kind of give you guys a brief overview of some of the changes that have been happening recently, what to expect and the reason why they're happening and how you can position yourself in the best position to help your client so there are no unexpected surprises at the end. Let me go ahead and share my screen. Turn off my video. Okay, let me go ahead and share. And then let's see. Okay. So there's a couple of things going on right now. Not only are there moratoriums due to saturation, but there are also moratoriums due to underwriting changes so that carriers are getting a lot more restrictive with what is eligible with them, which means you're all familiar with closures in California. So as of last week, all the independent carriers that are closed, right? So Progressive is basically closed. In the state of California, Encompass, which is owned by Allstate, is closed. Allstate's not writing on their own paper anymore. NatGen Premier is also owned by Allstate. On the independent side is closed. Oregon Mutual has left the state. Pacific Specialty recently reopened for dwelling policies, which are, investment properties, but they're no longer open for home insurance. Berkshire Hathaway is getting stricter. They're actually non-renewing homes between 1960 and 1970. Stillwater remains closed. Foremost is closed to HO3, and they're open for some DP3s. State Farm on Memorial Day weekend announced right before the long day weekend that they are completely closed to any sort of home product. So whether it is home renters, rental, umbrella, anything that is fire insurance, they're closed to. Berkshire Hathaway followed after that. And then just a couple of weeks ago, Nationwide is closed. They're closed in all across the country except for 9 states. I believe California is not one of those. And for the states that are still open, they have very, very strict underwriting guidelines that you have to meet before they will even release a quote. And so companies like Mercury, Hippo, Lemonade, Safeco, Travelers are open in some areas, but they, again, have restricted their appetite. And the reason why this is happening is that it's not because of loss ratio. It is because we in California have a shortage of space for homes. And so we are building in more higher risk areas. And because of that expansion, the higher the risk, the more probably that something will happen. And so that's what's driving that. Now, what options do you have available as realtors? How many of you, just by show of hands, are familiar with the California Fair Plan?
I think some of us are,
Okay.
let's say.
Do you
If
know
not,
what?
go ahead and
Yeah.
explain what it is. So in case someone doesn't know.
Yeah. So you will sooner than later, especially with the state of the industry right now, come across properties located where a standard home carrier will not offer home insurance, and you cannot close on a home unless it's insured if it's financed. So what's been happening is that in the case where no carrier will offer home insurance for property, you have the option of what's called the California Fair Plan. It is the California Fair Access to Insurance Requirements Plan. It is a state pool, which means that for the carriers in California that do not offer a standard home product, they pay a portion of based on their market share into the state pool to say, hey, we're not insuring, but we are donating proceeds so that you can go ahead and insure these homes that we do not want to take on the risk, right? So that provides basic fire insurance coverage for properties in high risk areas, again, when traditional insurance carriers will not. Now, it is in the sense that the California Fair Plan cannot deny you coverage based on the location of your home, except in the situation where the condition of your property is just not up to par. So, like if like the property is distressed, there's stuff, like that's not in good condition, stuff's falling over, stuff is in, need of repair, they can deny in that sense because it's not the location, it is the condition. They need to show pride of ownership. The California Fair Plan only covers for fire, wind, and vandalism. It does not offer coverage for water, theft, and liability. So oftentimes you will need the Fair Plan and what's called a difference in conditions policy or wraparound policy, so that together combine the two cover all the risks that a regular home policy will have. And people are not aware of that. Sometimes they think, well, I just need one or the other. It is the fire one that lenders care about because there's a higher probability of a home being total loss if it catches fire versus, a water or theft or liability claim. And contrary to what people, I've heard from lenders, from realtors, from insureds that, I don't know, the Fair Plan only covers my home. They don't allow coverage for others. And that is, misinformation. The California plan is very modular. You can have coverage for your home. You can have coverage for your personal property. You have coverage for other structures, for your trees, your bushes, fences, whatever you choose to have or not choose to have. The max coverage on the Fair Plan is $3 million combined of all those coverage limits. And since it is a state pool and a state, sponsored policy, regardless of which agent you go to, if the coverage limits match, the price is the same. It does not change. So if you get a quote from one agent and you go to a different agent and the prices are different, it's because there are different coverage limits, different deductibles, different, information on those plans. But if you match them up and you line them side by side, they should match because that's what the Fair Plan is. Every agent has access, has the same rate. So it's not going to change just because you changed an agent. And agents in California do not have binding authority. So they cannot issue the Fair Plan. Only the Fair Plan can. The Fair Plan you cannot do for home closing, you cannot get a future effective date with the Fair Plan unless you get payment. So oftentimes, in order to have insurance to start, a client will have to put down a 40% deposit and it get reimbursed once the escrow check pays through if the insurance is impounded. So a lot of this stuff, if you're not familiar with the California Fair Plan, it can throw a loop when you have clients that have homes in those higher risk areas. Any questions on this?
So Gia, it looks like in the chat, Philip says, Fair Plan is still holding up on our property. Keep requesting more pictures, etc. And he was asking again, so if the home is in good condition, they cannot deny.
Correct.
Okay.
Yeah.
And go ahead.
And to get a quote, so basically how the Fair Plan is, you can get kind of like how much will it cost to insure this home with the California Fair Plan portion of it. But in order to actually get an application to where you can take payment to where it can issue a policy, they changed last year requirement with the Fair Plan is you need 2 photos to submit, which is a front of the house, a picture, and then a picture of an address marker, whether it's on the home, whether it's on a mailbox, whether it's on the street. Those 2 are required in order to actually submit a quote to turn into an application so that payment can be made. And so I tell my realtors, if you are showing a home and the client is possibly interested in it, grab those pictures because you'll need them before the agent can actually get a policy that can be issued. Okay.
And then Charles said something about loan audio. I'm not sure what he's referring to. Charles, can you be more specific? Or sorry, Charlie. Okay. Well, do you want to go on to the next slide?
Yeah.
Okay.
Sorry, let me hold that.
Okay.
Okay. So just, to touch on what impacts eligibility with homes, claims history, condition of the home we talked about, location of the home, type of home, age of home, lack of updates to home. Catastrophic claims are claims that are linked to a natural disaster. So in California, we can, get wind and hail claims with their storms that come through, or smoke claims if your home is impacted by any of the fires that happened. So those, now, if somebody tells you that those aren't claims, because there are some third-party companies that go out there and they solicit via mail or door knocking, or they'll call you and say, hey, file this claim, we'll get you money for it. But it's not actually a claim. That is false. Okay, so that will impact your eligibility as a buyer and as a seller for clients. And so this impacts your job as a realtor, because we've had some homes where the previous owner filed a smoke claim, and because there's a claim within the last 3 to 5 years, so some carriers are open right now for business are not eligible with that home's not eligible with them. So just to be aware. Let's see. And the reason why the location, when we talk about the FAIR plan, actually has impact on insurance is because of protection class, which is a fire risk assessment tool that carriers use based on the location of whether a home is rural or outside city limits, whether a fire department is staffed by volunteers. So it's I've had clients go, well, there's a fire station like down the street from me, but if it's staffed, it doesn't count. If a fire department is more than 5 miles away, if a hydrant is more than 1,000 feet, the higher the protection class, the higher the probability the home carriers will not offer a standard home HO3 in California. And I'm starting to see more and more carriers not take things like that protection class 2 or higher. They've been restricted. A couple of years ago, you could see carriers like Travelers and Mercury taking 3 or 4, depending on what development that home is in. But right now, anything that's 2 or higher, I'm seeing a lot of them deny. They'll have to go FAIR plan and DIC, and that insurance you're looking at going from maybe $900-$1,200 on average to about $3,000, $4,000, $5,000 plus a year. That is kind of like the difference you're seeing. These are just kind of quick tips to follow up, refresher for most of us, or for any newer agents, when to get a quote before putting in an offer. Why? So there are no surprises. Do not wait until you're ready to fund to get a quote. More often than not, I've seen people say, hey, I cannot close on this home if my insurance is, X amount a month. And I'm like, your home is, out in Shaver Lake. It's not going to be a standard home policy. Unfortunately, there's nothing I can do. So do not set yourself up for disappointment by not being aware. I always recommend that you get a quote tell your client to get a quote with the insurance who does their auto. The lender that you work with will most likely have insurance people that they work with. But you as a realtor can also say, hey, I have an insurance person that I'll get a quote for you, so that you have 3 that you can compare them to. I'll look at coverage and not price alone, because a lot of times, for example, I just did a quote not too long ago for a home, and it required a flood. Well, the client wanted to go with me for a flood and didn't want to go with me for the home. Unfortunately, I will not do standalone flood for a home that I don't insure, because my limits for my flood were higher than whatever quote that had gone with the home. Carriers do not like it when coverages don't match, especially when people will lower coverage in order to get a price through for a rate. we have what's called replacement cost for a home, which is what carriers use to determine the rebuild cost if something should happen in a total loss. It's not the same as market value, and it's different from what your loan amount is for the house. The example I have is that, if you're buying a property, it factors in land. The appraisal factors in, all different factors, but all insurance cares about is if this home burns down to the ground, what do we need to repair the home? The land is still going to be there. The view is still going to be there. Your loan is still going to be there. But is the home going to be there? What can we do? And so that's we get a lot of confusion between clients, between lenders, and between realtors about the market value and what they think it's worth versus like the replacement cost. There have been times when they have a $150,000 loan, but the home was a $500,000 replacement home. And so client was like, I want this to only be covered to $100,000. Well, insurance carriers don't do that. They won't do that because if something happens, you want them to rebuild it. And B, I won't do that because, you may not be a good fit for me if that's the case. So, but other than that, home and policies in California do not cover flood or earthquake. If you didn't know, December 21st of 2022, federal legislation passed that allows FHA loans to accept private flood insurance. So if you have a lender, if you have somebody saying they cannot accept private flood for home in high flood areas, refer them back to this federal legislation because you are not required to go through the NFIP anymore. And that can help with the rates sometimes for your clients when they close that home. But earthquake, there's also some recent changes to earthquake as well. In the sense that they have increased some of their minimums with regards to deductibles, and they've lowered some of the coverage limits if you go through the CEA. So that was a recent change that came through in the past week or so. But other than that, I mean, again, you need insurance to close. Please stay on top of it. If you have a client that's getting ready to close, check with your insurance person to make sure that that policy is still valid. And I've been advising a lot of my my referral partners that if you can get a standard home policy in hand, ready to go, roll with that because you don't know what's going to happen the next day. Had a client where they got a quote with USAA and then a quote with Costco's home carrier. 2 days later, went to bind and USAA was closed, and so was Costco, and they couldn't get a policy in place. So like they don't let us know sometimes. Sometimes we find out the day of too. So that's what's going on with homes right now. It's gonna be tough. It's gonna be hard for a while before it gets better. Unfortunately, I don't have good news. I just tell people be educated, be on top of it so that you can set up expectations with your clients, with people you work with, so that you can make sure you can minimize the bumps in the road with the home buying process. So.
Okay, Gia, we have a question. What was the third thing that the FAIR plan covers? Fire, wind, and what else?
Vandalism.
Okay, thank you.
Yeah, so fire, wind, /hail, and vandalism. And then the difference in conditions through any other carrier will cover the water, the theft, and the liability.
Okay.
So yeah, I didn't want to go super heavy into, can you list the companies that will write? I actually, my list is not all inclusive because as of last week, they may be open, but they may be close to saturation. And so, stuff like Bamboo is still taking business. I know that Mercury is still taking business. A Universal North America, CSE, Aegis General is still taking. And these are like the standard admitted carriers in California. There's also like surplus lines. So like the sky's the limit on that. But again, with surplus lines, they do not adhere to some of the California guidelines with regards to insurance, so they can pretty much double your rates the next year. And that's part of California is one of the strictest states in the country with regards to consumer rights and making sure that you guys are protected. And I think that serves as kind of like a double-edged sword, because what's happening right now with especially with the pandemic and everything shut down for the past 3 years, the Commission of Insurance has prevented carriers from getting any rate increases through. And the election was last year, so this year, first half of the year, was the first time that any rate increases have gone through. And if you're not familiar with how that works, anytime an insurance company applies for a rate increase to, the rates, they have to open their books and say, hey, here's our loss ratio, here's, our profits, we need an X amount of percentage increase. And the Department of Insurance can review it and they can say, nope, you asked for X, we're giving you Y, or no go at all. And so that's what's been happening for the past 3 years. And so carriers have been paying out on claims that they've been able to collect rate on, with, everybody inflation has gone up. So everything has gone up. Insurance really hasn't really gone up outside of minimal inflation. And I think inflation is only about 2 or 3%. If you have an agent that puts inflation guard on your policy, that's about 2 or 3%, which is inflation has increased higher than that with the cost of things. And even when a rate increase has gone through, you won't see it until renewal. So, if your policy renewed last month and the rate increases goes through, like for home policies, they're a year. So you won't see the impact of that until next year. So that carrier is not going to be able to collect on that increase until next year. So now normally it's usually, like 6 months to a year behind, but carriers are trying to catch up for the past 3 years. So that's not helping things either.
Yeah. Yeah. So yeah, as Gia said, get your quotes in. Gia, how long does it usually take to get a quote turnaround? What's the turnaround time?
So turnaround time for carriers that are open right now, depends on your agent, but you can get something within, a couple of hours, 24 hours. If there's something about the home that triggers underwriting review, which could be a claim, it could be, the client's claim history, the home's claim history, if they don't pull that there have been any updates. On average, underwriting review for carriers right now, I'm seeing between 3 days to like a couple weeks. So if that home is not like in clean condition, and by clean, I mean, like the buyer or the seller have no claims, the home is not from like 1910, right? Then, you can get, you can expect, within 24 hours, depending on your agent. For me, once I get a quote, you get it same day, but, not everybody works like me, so I can't speak on that. As far as the FAIR plan, again, the getting a price indicator is pretty, as long as your system's not down, same day you can get it. It's the issuance that is, takes time to review. So once you get those photos and you want to get an application to turn into a policy, it's 3 to 4 days for review once you submit those photos. And then once payment is processed, it's the next day that a deck page will issue. So just to factor that timeline in, if you have clients that are in higher rush area.
Yeah.
And I know that, we have agents from Southern California all the way up to Northern California. It's a little bit different in Southern California, where I think agents in Southern California are more familiar with the California FAIR plan. But I think Central Valley agents, if you're not working like in the foothills of, like Toll House, Prather, Coarse Gold, you are not as familiar with the FAIR plan, but you will be, because all that stuff is moving inwards. Like Clovis right now, 93619 is already seeing stuff like that. So
interesting. Okay, great. Do we have any more questions for Gia? Please fill it, type it in the chat box. Well, I don't see any more coming in, but Gia, how can we get a hold of you?
You can get a hold of me via phone or email. I have it on the screen, 559-999-5350, or info at PBM Insurance. You have a question, just let me know. it is important when you're getting, kind of like an assessment on whether a property. I can take a look at an address from an overhead view and pretty much, on Google, review and be able to tell you like pretty much almost like 99% of the time, oh, it's going to be California Fair Plan,
Yeah.
and a DIC. Just because, if you can't see a home from aerial view, if it's just all trees or brush, if it's even slightly remote, you're looking at the fair plan. But the good news is they do allow you to, primary, secondary, vacant, seasonal. If you do short-term Airbnb, the fair plan will provide coverage for all those scenarios. So, luckily, we have some carriers that say, if you rent it Airbnb at all, you're not eligible. Well, the fair plan doesn't have those restrictions. And again, their only restriction is making sure that your home is in insurable condition.
Yeah.
So they cannot deny it because it is a state pool.
Now, is there any, I just thought of this, but how about for ADUs? Is there any coverage for those? I know ADUs are a big thing right now.
With regards to the California Fair Plan, you just have to schedule it. You just say, hey, I want to, other structures. Basically, with the California Fair Plan, if you have any structure on the property that has a kitchen by itself, you have to write a separate policy for it. So you can't have that as an additional structure. It's going to be a second policy. Yeah. So if you have 2 ADUs in addition to the main home, you'll have 3 California Fair Plan policies. Yeah.
Well, any last questions before we finish up here? Please throw it in the chat box. I highly recommend, and I usually do this, if I know my clients are interested in a property, the first thing first I'll do is, shoot over to my insurance agent, hey, can we get a quote? So before you throw in that offer in to, when you're writing up that, before you write up that offer and send it in, make sure you get with your insurance provider and get a quote, so that way your clients can see what's going on. And as it takes time, as Gia said, some carriers are taking time, on the turnaround time of getting those quotes to you. So yeah. Anything else, Gia, before we finish?
No, just that if you are reaching out to an insurance person for a quote, make sure you have your client's name, their date of birth, and the property address they're buying. A lot of times it also matters how it's financed because, some carriers will not take private lenders, especially for, investment properties. Different carriers will charge a little bit of a surcharge if it's in a trust or an LLC. And claims history is very important, whether it's on the property or on the client. So again, the 3 pieces of information that you'll need before anything else is name, date of birth, and address.
Perfect. Thank you.
Yeah.
Thank you, Gia.
Thank you so much for having me.
Of course. So if you need to get a hold of her contact's still on the screen. I did throw her phone number in the chat as well. But yes, you're always welcome to get a hold of Gia. And so, well, I guess we're gonna end it short here today. Next week Travis will be on. I am trying to schedule someone coming and talking about ADUs as well. So stay tuned for that for next Monday. But other than that, everyone have a great day, and we hope to see you next week. So have a good one.
Annie,
Yes.
if you have somebody talking about ADUs, make sure they
Yes.
talk about the insurance part of it.
Yes, we'll do.
Yeah, because ADUs on properties, with a loan, it's still single family loan.
Okay.
And realtors, it's a selling point to say, hey, there are already properties right now with ADUs, but on the insurance side, it's a hot mess.
Oh, okay.
Because insurance means, like right now you can have 3 total residences on a single plot with, like 1 primary and 2 ADUs, whether it's connected or separate. Well, if you're living in one and you're renting out the others, those are different policies. And so
Yeah.
you're gonna have a primary versus, like 2 tenants if they're separate tenants. And it also, like, are you going to be doing short-term or long-term? Carriers will not like that.
Yeah.
If you already have a carrier that's grandfathered in, that has, like, we're talking about all these carriers are closing for new business. Well, a lot of them do not like you renting out anything on your property, like Progressive, for example. Do not allow any rental activity on properties. So if you have a Progressive home and you add an ADU and you say, hey, I'm going to rent that out, well, now you're not eligible with Progressive and you get non-renewed with Progressive, but now no carrier will take you, and now you'll have to go on the fair plan depending on the coverage, where you're at. So now your insurance
Yeah.
is going to be impacted. So all these are like consequences of making those decisions that a lot of what I've seen with people presenting ADUs, they don't touch on the insurance part, and we get to deal with that when we tell people, hey, because I've already this year, realtors come in and say, hey, I need a quote for this home. It has an
Yeah.
ADU in it. And I said, well, you need 2 policies. And say, well,
Yeah.
client says, I don't want to pay extra for that policy.
Yeah.
Said, well, you're not a good fit for me because that home's not insured correctly. But you would want something to, if something happened to that, ADU unit, you would want it replaced, but you're not eligible. That makes you not eligible with the carrier that you want, because on the application it will say, like, are you renting any premises?
Yeah.
So this is something that you should probably have somebody touch on,
Okay. Yeah. Well,
just so that you can prepare your realtors and your.
yeah, of course. Yeah. Thank you for that. Yeah, I'll mention it to them next week, and and go from there. Maybe we should have you on too. So
If you want me to be here for the insurance part of it, like, I can,
you're
just because that is something that I see when people present on ADUs, they leave out the insurance ramifications of what can happen and what to
yeah.
expect.
Yeah.
Because when you are financing a property, there's only one loan, so the lender will only pay insurance on one policy. When you have 3,
Yeah.
they're not going to pay the rest, and so those will have to be direct billed, and the client doesn't want to do that. They want everything impounded. It becomes a whole issue.
Mm-hmm.
And there's missed payments and cancellations, and so we already see that currently with 2 properties on one lot with one loan.
Yeah.
Imagine 3. So
Yeah. Yeah, you're more than welcome to join in our meeting. So
just let me know. I will sit
yep,
in and I
will
can
do.
answer any questions.
Perfect. No problem. I'll let you know.
Thank you so much,
Okay,
everybody.
no problem. Thank you, Gia, again. Everybody have a great week, and we'll see you guys or talk to you guys soon. So have a great week. Bye-bye.